Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of Afya Limited. Afya is a company that provides medical education in Brazil. So we're doing an international stock. I find it very interesting. So let's take a look. But before we do, if you like this kind of content, don't forget to like and subscribe. It helps me out a lot with the YouTube algorithm. So I would be very thankful. And if there's stocks you want me to analyze, comment them down below. I love doing subscriber requests, and there's many interesting opportunities that have come through that. So let's get started. Now, who they are. So they have three business segments here. The first one is they have undergraduate programs. They have an actual campus. You can go to medical school, take health courses and other courses. You can do continuing education with them. So do your residency or your graduate degree. And you also have medical practice solutions. So they have solutions for physicians. They have sort of these links with the health industry in Brazil. So their undergraduate programs, for example, they're a market leader there. They're pretty well established in the geography of Brazil. They have a business model that has pretty good margins, I would say. And they have a master curriculum that you can go to afterwards or just continuing education. So you see this sort of pipeline where you can do the undergraduate program through medical school, 6 years over here. Then you can do your continuing education, your residency, and you can actually be in the Afya ecosystem about 10 to 12 years to become a subspecialist physician, 8 to 10 years to become a specialist physician, or being a generalist for 6 years. So you could be retained by them for quite a few years, and all while you may be engaging with their medical practice solutions. So they have a very integrated system there. Now, they are all over the Brazilian continent, basically. The ones that they're not in, Boa Vista, for example, or the other states, like these places do not tend to have much population, but in the populated places, they tend to be there. And they have a lot of approved medical seats, 38 undergrad campuses, 20 medical graduate campuses. So a lot of stuff there, a lot of students, even more continuing education enrolled students and monthly active users there in their ecosystem. So that's pretty interesting. Their revenue is pretty high. It's all in Brazilian reais, but I will be doing my calculation in US dollars later. So they also have a share repurchase program that's pretty good. If you're a shareholder, you want them to buy back stock because that makes your ownership more significant. The percentage of the company that you own is larger every time they repurchase shares. So that's great. That's a way to give you back money in a way. Their financial overview, as you see, we love to see when a company is profitable, not just from net income, which here is the net income, and you'll see that it's pretty healthy. It's looking pretty good. Even the first half rather of 2025 is looking pretty much just as good as the year 2022 was before adjustments, at least. So pretty good to see. And in terms of cash from operations, also very positive, very healthy. We love to see that because cash from operations minus capex, if you'll remember, is free cash flow, which is what they actually have to do stuff with, how much cash they have to pay dividends, to buy back shares, to acquire stuff, to just reinvest and grow. So that's very important to keep track of. And I tend to love companies that have very healthy free cash flow. So here's the long-term performance here that you can see this monstrous revenue growth in every year except 2024, where they had a dip in revenue. But based on the performance so far, they'll probably retake that growth pathway and just monstrous double digits growth here. It's just insane. Gross margin. The margins have also improved so much from 40% to now consistently over 60%. That's 63% number. Their operating margins also around that 30% number. Not as great as the gross margin, but that makes sense, but still positive, healthy. Same with net income back here, where the net income margins pretty great. The earnings per share pretty high. So that's great to know. Return on invested capital positive and consistent. So financially and historically, the company seems to have been performing okay. And generally, there will always be people looking for healthcare degrees, especially in a nation like Brazil. And actually, you may say, okay, well, recently the census around many countries in Latin America has shown that the population there is aging quicker than we realize. And that means that healthcare workers will still be in demand for an aging population. So I think this is actually somewhat an advantage, at least in the short to medium term, maybe in the long term. So far, it's looking good. And will Afya be more relevant in 10 years or less relevant? It seems like more relevant. So, even one of the basic litmus test questions is sort of passed so far by looking at the financials and asking ourselves a few qualitative things. No, so let's put this in an actual model. So I'm going to say that my required rate of return here is going to be 13.5%. That's my required rate of return, which it's a little higher than I usually do. Why? Because I added a little bit on top as a country risk premium. That's saying because it's in Brazil, because there's more volatility there as opposed to other investments, I am going to require a higher return to account for the extra risk. My perpetual growth rate is going to be about 4%. And I'm going to dip the free cash flow a little bit here, but then after that, it's going to grow pretty steadily at around that 10% level and then very consistently at 4% for the rest of eternity, basically. Then I'm going to divide the value by that discount rate, by the total number of shares out, and I will get a fair value of $20.01 per share in US dollars since it's listed in the NASDAQ. Now, if I subtract the net debt out, which is about $391 million, then we would get an actual value post debt of $15.70 per share in US dollars. So even though they earn money in Brazilian reais, we're doing it in US dollars because they're listed in the NASDAQ and we can directly compare with their listing there. So let's look at how much they're worth right now. And wow, we're actually really not far from that value. 15.7 versus 15.5. So according to my model, they're somewhat fairly valued. And as you'll see, this the P ratio looks very low. It's about 11. Dividend yield of 1.5%. So just a little dividend as a little reward. You wouldn't actually want a company like this to have a super high dividend because then in a bad year, they would get tied up. Maybe they would need to cut the dividend. That's not fun. But yeah, essentially, their performance the last 5 years has been pretty bad, even though the growth has been pretty good. So if you bought in these levels where it was worth $10, you would have been pretty happy. At these rates, it's gone down from even earlier in the year, the 52-week high is about $20. You wouldn't be that happy with it. At the current price, I don't know if it's a screaming buy, right? I think there's clear buy points such as down here and clear sell points such as up here. I just don't know at the current price. And let's look at the risks and rewards then. So you'll be quite exposed to currency risk with reais if you're investing from outside. If you are holding this in US dollars and the performance of the real is very, very bad, then you may have some of your gains eroded there. Also, online reviews for Afya are not very positive in terms of how they prepare personnel. What I did is I went onto Reddit and I just typed in Afya. And there were a lot of posts related to medical careers in Brazil. And a lot of people were saying that the professionals that they're seeing come out of Afya are some of the worst prepared, or that the return on your investment for going there, despite it being cheaper than other comparative medical schools, which is it seems to be the way that they're competing there is saying we're cheaper, we'll get you through. It seems like there's at least a lot of note there in terms of reputation and review where it's people have seemed to take notice that they're not that well prepared. So that is something to consider if you want to do the qualitative research part, which I think you should always do. Then reviews wise, it's not looking that great. And the valuation does look good, but it's not a screaming deal giving the country risk premium. Because I want a little bit higher required rate of return from riskier investments, that brings the total value down a little bit. And that's just what I'm accounting for as a conservative model. The reward, however, is that growth is absolutely spectacular. The margins are pretty great. These will always be careers that will be sought out. So there's plenty of demand and room to grow in Brazil. And the valuation seems at the very least fair, which is fine. A small dividend plus solid free cash flow and perhaps more share repurchases does give a pathway to returns, especially if the stock dips a lot further. So, in general, I just suggest you use a risk first mentality. There will be buy points and sell points for a lot of stocks, but you have to decide whether, with the forecasted growth, the risks that come first are worth then the potential rewards. With Afia, I don't know if it's as clear as it may seem when you take a look at the screaming growth, at the amazing growth and margins that they have, because of other risks that are important there. And just also understanding, do I want to take the time when it's a stock that may be far removed from you to try to understand the panorama of medical education in Brazil, right? To understand what the potential competitors may be, or what their reputation is. I had the advantage that I do understand Portuguese, so I can go in these forums, sort of read through, understand what people are thinking. If you're doing an investment like that, do you want to take the time to research that? And do you want to take the time to keep up with that? That's also something important that you may not have thought at first when you're doing an international investment, but that you really can't skip. Now, with that said, thank you so much for watching. I hope this video was super helpful. And once again, if you liked it, don't forget to like and subscribe. Thank you so much once again, and have a great rest of your day.